You've been lied to about DSCR loans. And we're not saying this lightly. This week, guys, I'm going to talk about 5 different myths that everyone seems to overlook. 1, 2, if you skip over them, they're more than likely going to break your momentum or even worse, kill your cash flow. So myth number 1, a DSCR ratio of 1.0 is good enough. Let me tell you something right now. It is not. It's crapola. It is truly not something you need to go after. I am sure you've seen out there the lenders that are talking about a DSCR ratio of 1.0 or less, and they'll fund the deal. Guess what? At 1.0, that's just covering your PITI, principal, interest, taxes, and insurance. Doesn't take care of any type of reserves. It doesn't take care of any property management fees. How about you making money and cash flowing? Guess what? At 1.0, you're losing money. And if you go below 1.0, now you're not even covering your principal, interest, taxes, and insurance. So you're going to be coming out of pocket. And of course, run your numbers. Make sure you are making the margins and the profit that you want on each of your deals. Sweet spot of 1.25 to 1.35. If you can get to 1.4, that's a solid safety net to where you're putting some money away, you're paying your PITI, you're paying your property management, and you're making some cash for yourself. Guys, I see so many investors out on the internet or talking about it. Oh yeah, I've got a deal that the ratio is 1.0, and they're bragging about it. And not very many people correct them at all. They don't even have a conversation with them to actually say, run the numbers. So guys, please, I ask you, run your numbers. Understand exactly where they are at. At a 1.0, if you're going to get a DSCR loan, you're going to be losing money. Myth number 2, DSCR loans do not require personal guarantees. Absolutely false. All the lenders that I know of, that I work with, whether you close it in your personal name or a LLC, require a personal guarantee. They want somebody on the hook. Just because you close it in an LLC doesn't mean they're just going to wash their hands and say, oh, we're good, and everything is hunky-dory. It doesn't work that way, guys. This is a business purpose loan, so they want to make sure that there's somebody that has enough assets, God forbid something happens, that you're able to make the payment if you lose a renter, or even worse, you're behind on your mortgage payment. So please, make sure when you're talking to a lender about a DSCR, make sure that you understand that it's a recourse loan. They do require personal guarantees, and closing in an LLC does not shield you. You're still on the hook. And let me go into a little bit of a deep dive on the LLC. If you have multi-members, let's say you have 2 members in your LLC, you have John and Janie. One of you has to be a personal guarantor on the actual loan, and you typically will have to have 20% or more equity or ownership in the business to be a guarantor. Myth number 3, all DSCR loans are the same. Let me tell you this. Wrong. Because if you go to your local bank or your local credit union, they're not going to give you a DSCR loan. They're going to give you a conventional loan. And guess what? They're going to want your pay stubs. They're going to want the last 2 years of your tax returns. They want the last 60 days of your bank statements. They want to see your W-2s for the last 2 years. And all of this goes on your personal credit, and it goes against your DTI, your debt to income ratio. When you're researching on whether you want to go to a local bank or what they call a non-QM, a non-qualified mortgage lender, ask the questions. Is your local bank going to set you up for a loan that's based upon the asset, the property, or are they going to use your personal income? More than likely, they're going to use your personal income, and that will hurt you. I see this day in and day out to where there are investors that come to me and say, hey man, I need to get a loan. I'm like, okay, great. Tell me about the property. And they tell me about the property, and then we pull their credit and it ends up being on their personal credit. And they're like, I wasn't told that it was going to be on my personal credit. And I'm like, they should have told you because they would have pulled your credit. But the first question I always ask them is, this is the red flag question you need to be asking your lender. Do you need my personal income documents? And if it's a yes, it's going on your personal credit. If you don't want it on your personal credit, then you need to go somewhere else. If you don't care that it's on your personal credit, then you can actually go there. I'm not telling you not to get a conventional loan versus a DSCR. I'm just telling you the downstream effects of it because it will be on your credit. Good side of it is 3%. You don't have to put 20% down. So there's a huge difference. Some lenders might actually have an overlay to where maybe they don't let you put 3% down and you have to put 20% down. It just depends. But if you're wanting to have it on your personal credit, that's up to you. I'm not saying to do either or. You're just going to have to go through a lot of hoops. And I know a lot of people do not enjoy the extra hoops you have to go through with a conventional loan. Because ultimately with the DSCR, I'll pull your credit. That's the entry point. Higher your credit score, better rates you get. After that, I'm just asking you for LLC documents, your operating agreement, your EIN, your articles of incorporation, and the last 2 months of your bank statements for your entity that you're going to use for your down payment and your closing costs. And then after that, we order the appraisal, we submit it to underwriting, get the conditions out, work through the conditions, resubmit it for clear to close, we're clear to close. It is a very straightforward, simple process. It boils down to, does the property cash flow? And if that DSCR ratio is in that sweet spot or better, you're going to get better pricing from lenders. The closer you get to one, so guys, determine if you want to go to a local bank or if you want to go to a non-QM lender, mortgage broker, loan officer, however you want to do that. But that's a decision that you have to make. Myth number 4, DSCR loans are only for experienced investors. That is absolutely false. You can be a first-time home buyer and a first-time investor, and you can still get a DSCR. Not all lenders will allow you to be a first-time home buyer and a first-time investor. There are some lenders that will allow you to take an online investing course. That's about 3 to 4 hours, and you get a certificate. There are some lenders that flat out won't allow you to be a first-time home buyer and first-time investor. So you have to have somebody co-sign or be part of your LLC so you can actually get that first loan. And then once you get that experience, then you're on your own. But if you're being told flat out, no, there are no lenders out there that will not work with first-time investors, that's absolutely false. There is some limitations, and the limitations are very specific, like I addressed here, but I also missed another piece that I want to talk about: credit. So your credit score is your entry point, but also there's another aspect of that. So when you are a first-time home buyer, first-time investor, sometimes you might have limited credit experience. Lenders want to see all 3 credit scores. So you need to have Experian, Equifax, and TransUnion scores. And then you need to have 3 active trade lines. And those trade lines have to be reported in the last 60 days or less. So typically you want them fresh. So you need to make sure you have at least 3 trade lines and they're all active. Once you go under the 3 trade lines, then we have to start looking at alternative trade lines, which means we can look at utilities, rents. So they'll want a rent verification. We could look at cell phone. We could look at car notes. So car payments, those are the main ones. I want to stick to those. So once we go further down the line in the actual credit and we have to start looking at these alternative credit types, it becomes harder to get you approved because it needs an exception. So just ensure before you apply for a DSCR loan, be very cognizant that you have at least 3 trade lines and they're active. So myth number 5, you can scale forever without hitting limits. I put this in here for a specific reason because it's true and false. There are some lenders that have cap portfolio. You can actually do a blanket or a portfolio loan, which will allow you to scale a little bit quicker by acquiring multiple doors at the same time. In my prior videos, I have spoken about the downsides of those, and we can go through those at a later date and time. But there is a cap. Lenders do cap you out at specific amount of doors that you can actually have. So when you're working with a local bank, you're going to hit a DTI issue. So that'll come into play before you actually hit your doors. When you're working with a non-QM or a true DSCR lender, they have a hard cap between 10 and 15. I've seen a couple at 20, but I've not done enough deals with them to actually know that someone got to that door of 20. So be cognizant of that. Plan your scaling. Make sure that you understand that if you're going to work with a specific lender, understand what their cap is for your doors. That'll allow you to plan your build, but also plan your portfolio and future growth, because the build is great if you have all the knowledge and all the information you need to make an educated decision. There is a cap. It is a myth, but it's also false that there are some that will go higher than others. So you have to be cognizant of that. Just ask the questions. And the last piece, before you sign any paperwork, review it, understand it, ask questions. Don't just sign it because you're ready to close the deal and move on. Understand what you're signing, because ultimately, as soon as you sign, you're on the hook for 30 years or whatever the term of your mortgage is. You are on the hook. So guys, if you like this week's video, please leave a comment, share, and subscribe. Stay safe and stay healthy.